Welcome back to Synaptic Dividends. Today, we're taking a look under the hood of a company we all know, McDonald's. We've all seen the golden arches, right? But for us as dividend investors, the real question is their dividend a true golden opportunity for our portfolios?
So let's get right to it. Is McDonald's famous dividend a rock-solid source of passive income, or is it, running out of fits? To find out, we're not going to go on reputation. Nope. We're going to put the hard numbers through 3 crucial tests. Let's dig in.
Okay, first things first. The single most important question you can ask about any dividend is it safe? Can the company actually afford the checks it's sending out? We need to know if the cash it's really making is enough to cover it. To answer that, we use a fantastic little metric called the free cash flow payout ratio. Now, don't let the name intimidate you. It's actually super simple. Think of it like your personal budget. Free cash flow is the money you have left over after you've paid all your essential bills. This ratio just tells us what percentage of that leftover cash the company is using to pay us, the shareholders. A lower number means more breathing room. It's that simple.
So let's look at the numbers for McDonald's. You can see it bounces around a bit, which is totally normal. But the key takeaway here is that it's consistently in a healthy range. Over the last year, it's at 73.2%. That means after paying for absolutely everything, operations, growth, you name it, they still have plenty of cash left to cover the dividend with room to spare. So for our first test, safety, that is a big green check mark, a clear pass.
All right, a safe dividend is great. That's step 1. But you know what's even better? A dividend that grows, a company that gives you a raise year after year, that shows you they're not just healthy, they're committed to rewarding their investors.
And this is where McDonald's is just in a completely different league. 48. No, that is not a typo. For 48 consecutive years, McDonald's has given its shareholders a raise. It's an incredible track record that makes them a dividend aristocrat, part of a very elite group of companies. And they are just 2 years away from becoming a dividend king. Wow.
But the story gets even better. It's not just that they're growing it, it's by how much. The dividend has grown at an average clip of over 7.5% a year for the last decade. That's a powerful pace that has easily outrun inflation. That means your income from this investment has been growing in real terms. So on our second test, growth, McDonald's absolutely nails it.
And now for our third and final test, what I like to call the ultimate stress test. How does this dividend hold up when the economy just hits a wall? Any company can pay a dividend in the good times, but the truly great ones, they keep paying and even growing during the worst of times. And just look at McDonald's resilience here. Think back to the 2008 financial crisis. Markets were in absolute freefall. What did McDonald's do? They gave shareholders a massive 26.5% raise in 2009. Just incredible. Then let's jump to the 2020 pandemic. The world is in lockdown. And they did it again, increasing the dividend by over 6%. This isn't just surviving. This is thriving under pressure. It's proof of its strength when it matters most.
So, after running the numbers and putting them through our 3 key tests, where do we land? What's our final verdict on the Golden Arches dividend?
Well, the numbers tell a really consistent story, don't they? We have a dividend that is safely covered by cash flow. We have nearly 5 decades of unbroken growth, and we have undeniable proof that it can handle the most severe economic storms. Based on all the evidence, this dividend doesn't just look safe, it looks like a fortress. Now, if you want to go deeper and really understand the full business model, the competitive advantages, and the management team behind these numbers, check out our long-form analyses on our main channel, Synaptic Investing. The numbers we've seen today clearly show a history of incredible strength, but the question every investor has to ask is, can that history repeat itself for the next 48 years?